Hi everyone, this is Sebastian and welcome to another video where I teach some things around personal finance and share my experience in investing via index funds and reaching financial independence, and then helping hundreds of other people do the same. So today the question is, what is an index ETF? In previous videos, I have shared that I reach financial independence using index ETF and index investing in general. And so today we're going to go a little bit into the technical part of what index investing means. And so we'll start by defining what is an index ETF and how it works. And you'll see that just from its structure only, there's already many benefits for you as an investor. So I have a few slides for this. I'm going to share my screen. Here we go. Right, so you should be able to see my screen, which says what is an index ETF. Right, let's go. So an index ETF. First, a couple of points, important points. Most index ETFs are like index funds in the sense that they basically invest in similar things. And so they're passively managed, low cost, broadly diversified, but often more tax efficient than traditional mutual funds. So that's something to keep in mind. And there are also like stocks, as opposed to mutual funds, which are normally you have to purchase through directly the fund manager. You have to transfer money, often in large amounts, to be able to access them. In exchange traded funds can be bought through a brokerage account and traded like a stock on the stock exchange. So this is basically having benefits of both index funds and stocks. And then the general benefits of index ETFs are that they provide you with instant diversification at a very low cost. You can start with very small amounts because ETF shares often don't cost very much compared to stock shares, for example. And they are very simple to buy, own, and sell via a brokerage account. So these are some key advantages for you as an investor. So what's an exchange traded fund? A lot of us are familiar with what stocks are, right? So a stock is basically a share of ownership, a part of ownership in a company, right? So let's say we have company W, X, Y, and Z, right? And they each have their own value and they have their own stocks, etc., that are available for purchase on the stock exchange. And so you could take one company share, right? And let's say this little white square, that white rectangle is a company share. And what an exchange traded fund is basically an investment fund that will take shares in a bunch of different companies. So in this case, we take one from each of these companies, and then we do that for more companies, right? And that becomes an investment fund. And so traditionally, in the past and still today, you can access investment funds by transferring large sums of money to that investment fund, and then that investment fund will go and buy the stocks for you and manage them in the investment fund, right? But ETFs is basically those investment funds, but transformed into a product that is itself broken down into shares, right? So you have shares of companies, and then you have shares of funds. And so an exchange traded fund is basically a fund that has defined units of its own fund that are tradable on the stock exchange, right? So they break it down into lots of small pieces. That becomes an exchange traded fund. There's obviously a bunch of other things going on there, but from a practical understanding for the investor, this is how it works. And then some of these ETF shares are available for purchase on the stock exchange. And you as an individual, if you open a brokerage account, you can basically buy those stocks, right? So you fund your account, and then you can find those ETFs. You can find those ETFs on specific stock exchanges, and that's how you buy them. And so the money flows back into the investment fund, and the investment fund does what it does with it, which is probably buy more of those stocks, right? So that's what an exchange traded fund is. Now, investment funds are managed by fund managers, and they also often create their own exchange traded funds. And so the four main ones that we see being used are these four. These are actually the largest ETF providers, right? So Vanguard, iShares, Deutsche Bank, and so the providers are Vanguard, BlackRock, Deutsche Bank, and then State Street Global Advisors, and they each have their ETF series. Vanguard would, they call them Vanguard ETFs. BlackRock calls them iShares. Deutsche Bank calls them X-Trackers, and State Street Global Advisors calls them SPDR. So these are the fund managers. Now, the next question is, what is an index ETF, right? So we talked about what an exchange traded fund is, but then what is it when it's called an index exchange traded fund? And basically that's an exchange traded fund that follows a specific index, right? Instead of buying into random companies, it will follow a specific recipe, right? So an index is like a recipe that is developed by index providers. So in this case, the most famous ones are FTSE and MSCI for those of us who are investing in index ETFs. Those names will be familiar because they will appear in the ETF name quite often. And so we simply follow, well, the fund managers will simply follow the recipe, right? So the Vanguards, iShares, and all these guys, they will try to follow the recipe that is developed by the index provider, right? So the index is sort of a measure of a market, or a specific formula, a recipe that represents a specific sector. And as you can see, there's it could also be all sectors combined in all geographical areas, right? But that's what an ETF does. Now the next question is, what is a global index ETF? And the global index ETF is what it is. It is what it sounds like. It's basically an index. It's an ETF that invests in an index that tracks a global, the entire world, right? So it's an ETF that will try to invest in the companies that are part of a global index. So both FTSE and MSCI have a series of index that are, practically global. And so you will get companies from all around the world in that index. And some of these indices are designed in a way that maximizes the number of companies that are publicly traded and available basically on the stock exchange to be in that index. And these are the ones we like to invest in because they provide the widest diversification, both from on sector by sector. It's all sectors combined, and then also we invest in all geographical areas at once. So that's what a global index ETF is. So it's basically an investment fund that invests in the companies as per the recipe, a global recipe or a global index. So it follows a specific strategy that's defined by the index. And it is made available to investors like you and me on the stock exchange simply by breaking down this investment fund into a bunch of smaller pieces, which are the shares of the ETF that you can then buy. Right. So I hope that's clear. It gives you an idea of, the structure of all this stuff. It's obviously very schematic and it's simplified, but for most investors, this is all that you need to know. As an investor, you will have to open a brokerage account. We'll talk about brokers in a future video, but that's how you would invest. And then you have to pick the right stock exchange where you can find the ETF that you want to buy. Make sure it's in the right currency, make sure it's the right kind of ETF, make sure you have the right domicile. So there's a bunch of things that you will have to pay attention to make sure it's optimized for your situation, also from a tax perspective. Right. So that's basically all for today. I hope you found this useful, and if you did, and you know that people who might also find this useful, then feel free to share that with them. And then for those of you who were listening to this in audio, you will find a link to these same slides in the description. Right, that's all for today. I hope you're all well and safe and happy, and I hope I'll see you again here tomorrow. Cheers. Take care.